Well, Google is down 4% in pre-market and people are freaking out that Google's dying. About 2 weeks ago, I actually filmed a segment on the Meet Kevin report, and I never posted the actual video of it separately, but we'll look at that later. The segment that I posted was all about analyzing Google's fundamentals and its massive risk to artificial intelligence. We'll review some of those numbers here. But boy, oh boy, a piece in the New York Times this morning really is starting to drive nails into the back of Google and potentially into their coffin. And it's not that great. Take a look at this New York Times piece, which is pretty damning for Google. It is not something to be very excited about if you are a Google investor. I personally have no exposure to Google stock, either in a long or short. In fact, when I first said I want to stay away from Google after this AI revolution, this sucker was somewhere around $100 a share. And even though it's down 4% right now, that still leaves it at 105. So again, I ain't trading Google, but I tell you, long term, I'm a little bearish on Google right now. And I love Google. I use Google for everything. Absolutely love the company. But boy, oh boy, I think they got caught flat-footed here. Listen to this from the New York Times. Google devising radical search changes to beat back AI rivals. Folks, they are shaking in their boots. They got caught with small peepee at a time. You better have a little big one, not a small one. This is not good for Google's pricing power at all. So what do we see here? We see Google's employees were shocked when they learned in March that the South Korean consumer electronics giant Samsung was considering, it hasn't happened yet, but considering replacing Google's search engine with Bing as the default search engine on its devices. Folks, default search engines are the lifeblood of Google. You will get an iPhone, you open up Safari. Yes, you could change the default search engine. Guess how many people actually change it? Maybe 1%? Yes, you could download a different browser on your phone. Guess how many people actually do? Maybe 1%? I don't know, but most people don't actually even go through the settings on their phone. They just use what it is. When that default search engine is Google, the default is more ad money to Google. Well, that domination might be getting questioned here. Listen to this. Google's reaction to Samsung's threat was, quote, panic, according to internal messages reviewed by the New York Times. An estimated $3 billion in annual revenue is at stake with the Samsung contract. An additional $20 billion is tied to an Apple contract, which is also up for renewal this year. Now, Google is racing to build an all-new search engine platform powered by Google's AI technology, which so far, Google's technology has kind of fallen a little flat in demonstrations. In fact, in their popular demonstration that they rushed together after OpenAI released their ChatGPT 3 publicly, and now we're on 4, Google's presentation flopped because their AI gave some false data, which is a terrible explanation or a terrible example of their AI. Now, Google's been working on AI for years, but one of the concerns Google had even about 5-6 years ago was that Google had their AI had a tendency for providing false or unbiased results. Well, that was still true in their presentation a couple months ago, actually only about a month ago. And so now Google's trying to rebuild an all-new search platform to combat this potential pain coming for basically a search engine shakeup. In other words, Google could literally lose its dominance. Now, why is this really important? Well, what I want you to know is look at Google's last earnings, okay? Look at their Q4 earnings. Now, I usually go through earnings in depth with course members, but let's give you a little preview of what's going on here. Google search makes up 69% of their revenue. But it's not just Google search, folks. You have to understand, a company like these publishing companies that run a lot of ads, companies like the New York Times, they get 50% of their reach from search networks. So in other words, when people like Google News or Google or whatever, and the New York Times pops up, that creates 50% of the New York Times' views. What happens when AI steps in and says, you don't even have to go to those websites anymore? Well, now not only do you potentially lose the Google search revenue because rather than searching 10 times for an answer, people just search once, and your Google search ad revenue goes from 69% to potentially 6.9%. Obviously, it wouldn't scale that way, but as an example, it would basically fall by a factor of 10. The other thing that you're also going to lose, folks, Google network advertising. Look over here. Google network advertising is when Google advertises on a web page that somebody hosts. So if you go to like Zero Hedge or the New York Times and you see an ad, Google might be placing those ads. Well, that network is worth $8.4 billion in a quarter to Google. Google Search is worth $42.6 billion in a quarter. Combine those two together, you have over $50 billion of revenue simply from things that search could absolutely destroy. Their total revenue, everything combined, Google Cloud, services, you name it, was $76 billion for Q4. Well, if you potentially drop search and website placement by 90%, then you're left with 5 instead of 50 billion, right? And so now all of a sudden, your revenues at the company plummet. You go down to $31 billion of quarterly revenues instead of $76 billion. That is a decline of roughly 60%. Google earnings could decline 60%. Now think about that from a valuation point of view for a moment. If we just look at the earnings per share for here, and let's go ahead and annualize them for giggles, okay? This is not exactly what you're supposed to do, but we're just gonna play, or here, you know what, we'll take the year end. Let's take the year end rather than annualizing the quarterly. We'll take the year end EPS of 5.6, okay? And then let's put a little 5.6 right here. So 5.6 is the EPS. Well, that means this company right now at $105 is selling for, let's divide 105 by 5.61, they're selling for about 18.7 times price to earnings. Let's say their forward is about 6. Let's give them a forward of 6, right? If their forward is 6, then we're looking at 17.5 on a forward PE basis, right? Now, on a PEG ratio basis, let's say they're expecting to grow earnings at 20%, they'd be selling for a 1 PEG. Little under a 1 PEG. It'd be wonderful, right? But wait a second. What happens if their earnings, instead of being a forward of 6, actually drop 60%? Uh-oh. Well, all of a sudden, you'd be looking at a company that has a forward PE ratio or a forward earnings per share of 2.4. Now, all of a sudden, 105 divided by 2.4, the company would be selling for 43.7 times at a forward PE. That's very expensive. You'd be at a 2.15-ish PEG. That's very expensive. There are better opportunities at that pricing. So the stock probably tanks on that kind of hit. Now, I don't actually think that Google is going to get hit by like a 60% decline in revenue. But I want you to see how much of their revenue is at stake. And there's a reason why they are freaking out. They are freaking out because of a lot of their revenue being at stake. Now, under the new project name code Magi, we got some gamers over there. There's a new project named Magi, and basically what they're doing is they're throwing together designers, engineers, executives, and they're freaking out in these rooms called sprint rooms to modernize their people's experience with AI-powered search features that will launch soon. The AI-powered search will include ad placements underneath those segments. So the goal is that they would still be able to provide search revenue. But again, if people are searching 1/10 as much, when you're providing AI search, even with ads, you're not going to protect that mode as much. This is coming as a shock to Google employees. Initially, here it is. They held off on AI because it was prone to generating false and biased statements. Now the Magi project has 160 people working on it full time, and they're racing to try to mix ads in to search results that are generated by AI. Now I have to say, when you Google how many employees does Google have, see in the future we could chat GPT that, or maybe AI would say. But anyway, they had somewhere around 187,000 employees in September of 22. They have 160 people working on Magi. I mean, it starts making you wonder, wait a minute, dude. If your most important project that represents potentially 60% of your revenue is in the hands of 160 people out of 187,000, either how important is the project to you, or how important are the other 186,000 people working at Google? I mean, just to give you an understanding of how wild this is literally 0.08% of their workforce. The legal drinking limit, the blood alcohol limit for your blood alcohol content for driving is 0.08%. They literally have the legal blood alcohol limit of their staff working on what's probably the most important project of Google's sole existence. I don't know, it sounds low to me. I'm just gonna put it that way. It's either we're seeing massive layoffs coming or that number's too low. Probably layoffs, honestly, because like how many people do you need to revise the search engine? I mean, the more people you put in, the more clunky things might get. I don't know. Company plans to release initial features to 1 million people, progressively increasing that to 30 million by the end of the year. They plan to incorporate tools like Giphy that would use AI to generate images for you in Google search result, or Trivoli Tutor, which would teach you a new language through open-ended AI conversations. Could also give you some insights into what activities are near you when you are looking at Airbnbs. Look, you actually had Google's CEO Freakout yesterday on CNBC. CNBC. He was on 60 Minutes. It's not CNBC. He was on 60 Minutes yesterday. He discussed that society is not prepared for the rapid advancement of AI, that AI will impact every single product and every single service at every single company. This is actually very much in line with what I've previously said, and I'm not trying to pat myself on the back, but people have asked me, they're like, hey, Kevin, how are you going to use AI in your startup? It's like, listen, every company in the future is going to use AI just like every company uses email. You don't have to create your own AI. You could take a ChatGPT and then train it to be what you want it to be. Every company in the future is going to use AI just like every company used to use fax machines and then emails. It's going to happen, and the companies that don't will die. But I loved the analogy because that the CEO gave, because he mentioned, look, if a radiologist has to go through 100 radiology scans for potential cancer every morning they wake up, AI might be able to sort those from highest priority to lowest priority for the doctor, for the radiologist. And this could potentially prioritize care for people. That was just one example. I found that example very relatable because I use that as real estate. That's what we do with our AI. We use our AI as a way to prioritize which deals in a certain market are most desirable or most likely to be consistent of a wedge deal for us, so that A, we don't miss the most important ones because they have a highlighter through them, and we can focus our attention on those, right? That's what we're doing at HouseHack, and this is very similarly what I expect to happen throughout the rest of the world when it comes to AI use. But AI is trembling, and it's not or Google is trembling because of AI, and it's not a surprise. This is a massive piece, and it's something that we've been talking about for a while. Now, we'll do a little bit of a deeper dive into Google's revenues again, but we've already done a pretty good dive here. And I have to say, I think the message here is clear. For me, Google has way too much risk. It's not something I could consider investing in. I basically think the moat of Google is gone. Like, everybody's still using Google, but the moat of Google is gone. In fact, look at some of these notes that I wrote down. I wrote these notes down on February 9th. February 9th is when I did this course member live stream where I went through these numbers and I wrote down the following in red. In orange is when I came back later and I wrote down a couple little things in orange there. But in red is what I wrote down in Q4. And here's what I wrote down. I wrote Google negatives. Flat/weak advertising. Even their YouTube revenues are falling, right? I mean, you can see it right here. Look at this. You go to Q4 YouTube. Hold on a sec. Q4. Where is it? Ah! No, I can't find the revenue. Anyway, their YouTube revenues are falling. Not only are you there, here it is. YouTube revenues falling 7.8%. Google search falling 1.6%. Google network 9%. Yeah, Google Cloud is growing, but it's still a small part. So what did we write down over here in red? Google negatives, flat/weaker advertising growth. AI could weaken that search growth even more. You become a results engine versus a search engine. And I'm personally not convinced that Google is going to be the best beneficiary of AI. I wrote that down because that's the fact of the matter. We don't know that Google is going to be the best AI, right? It's easy to invest in Google when we know they're the best search engine, but if the moat is gone, who knows? See, I wrote here, who actually wins from AI? Is it the neural net, or is it the company training the neural net? Is it the processors, the data centers? Is it the NVIDIA? Is it InfiniBand Ethernet for the connections on those servers? Is it Apple? Or is it chip makers? We don't know. Now, who really benefits from AI? Well, it's going to be consumers and businesses, right? Consumers and businesses are going to be the ones that benefit from AI. If Google usually makes 5 cents per search and somebody searches 10 cents for an answer versus one time, that's your factor of potentially 10 in terms of loss, right? Of revenue. But who loses with AI? Search engines and labor, right? Who benefits? Maybe advertisers, maybe if they can figure it out. But almost certainly the people who win are businesses and consumers who learn to harness the power of AI. Am I convinced that even if Google provides more AI and advanced AI platforms, that they are going to somehow be the greatest beneficiary of AI? Absolutely not. And so that's where I have to say, I'm not wholly enthused about the potential for Google as an investment. I actually think there's a lot of risk in Google as an investment. And for me, that makes me want to pass. I don't like a lot of risk. I know sometimes people think I'm crazy and that's fine. You know, maybe I am, probably am. But I don't really like risk. I'm a little baby. I like companies I can really believe in and hodl without the risk of their moat going away. That's not cool.